Good afternoon, good morning, good evening, everyone. It is 6:50 p.m. Eastern Standard Time on this 5th day of May 2021. It's May the 5th, and yesterday I didn't even make a Star Wars joke. May the 4th be with you. May 5th, Cinco de Mayo. All right. Looking at Cardano. So, we talked about how the continuation pattern is bullish in nature, just a sign that we will continue higher. Likely to continue higher. That remains to be seen, although I will tell you that this current setup is pretty awesome. And it's really just because of one reason. I mean, it's one reason only. And there's only one thing I'm looking at on this entire chart that will really trigger a significant 90% bullish bias here. That is the lagging span. All right, if the lagging span can move, well, if it can stay above the candlesticks, and specifically once it gets to 1, 2, 3, 4, 5. So in the next 5 days, excuse me, if it can stay above the high here back on the 14th of April, 2021, if it can stay above 157, that is going to more than likely trigger a move that will sustain us higher. If we do continue higher, I'm really interested to see what happens over the rest of the week because of the volume. But if we do continue higher, how high are we going to go? I know we've looked at this in the past. I think we probably look at it once a week. But let's just kind of run through that. Let's get rid of some of the noise on the charts here. And just project. I'll take the weekly chart. By the way, the weekly chart, this is pretty awesome looking. So somebody may be looking at the weekly chart and saying, oh my gosh, it's at 75. That's overbought. No, it's not. It's not overbought at all. When something's in a bull market, the overbought levels are at 80 and 90. And you can see them kind of range between 80 and 90. So the bounce that we had back here at 65, that was the first oversold level. 65 was oversold. And then we get up to 75. It's a good spot, but the percent B crossed above 0.8. Okay, it's pressing up against the upper band of the Bollingers again. That looks silly. And if you look, we have the composite index sloping higher as well. That is also pointing higher. This is a nice thing to observe too, because both the fast and the slow averages are right on top of each other. And if we get a cross above both of these averages really at the same time when they're all close together, I call that the pinch. That is usually like it's like a fuse getting lit, or it's like the hammer hitting the percussion cap. It's an explosive move that we are likely to see. But also, folks, just want to be aware that we are trading right up against this resistance level. Okay, we're still trading up against this resistance level on the daily chart and the weekly chart. We need to see a clear break above it, but I think we're going to see that. We have a cross above 0.8 on the daily, crossing above 60 here, bounce off of the averages on the composite index. It's very nice. That profit target though, if you can see that sign up there that says 2.4, but I want to get like a confluence level. So that's what extension levels are great, Fibonacci extension levels. And if I can find a place where they kind of line up pretty close, that's what I want to find, a series of extension levels that all kind of line up on one another. So the cluster of 3 up here, we keep getting pointed to this level here, don't we? The 2.25 to, we'll just say the 2.4 value area. That's where, if we're looking for that next expansion move, that's where I think you see it. And then after that, it's in the $6 range. So look out for that. But that does it for me. From all of us here at Exchange Rates UK TV, thank you for watching. Don't forget to like and subscribe.